What's going on, everybody? It's Tim, and I want to get into some large caps today. I know. Normally I always talk about small caps. I am a bit more of a high risk investor, but I do love some large caps from time to time. And I'm going to get into three. Two of these I do own, one I don't, but I'm really watching closely. And let's get into this video. Make sure you like and subscribe. I put out daily videos, and first off, let's get into none other than PayPal, or PYPL. So going back roughly a year ago, we hit our top, came down a little bit, retested that top, that 307, 308, 309, couldn't break it, and started just downtrending since. So this catalyst here is what started the downtrend of PayPal. And then here we are at earnings. They gave not the best future guidance, but we're going to get into the actual numbers of that in just a second. But that just caused it to sell even more. And you would think with how much this dropped, we're talking from 181 to roughly 90 at its low, you would think that maybe they came in with some future guidance that might be 30, 40, 50% down from what they were expecting, but this isn't the case. And let's get into the numbers really quick and come back to the chart in a second. So I'll leave you guys a link below to this article. I'm just going to brush over a couple main things here. And first off, so PayPal reported EPS of 1.11, missed the 1.12, big deal. Beat on revenue, 6.92 million versus 6.87 million, right in line with revenue and EPS. But where the problem lied was the future guidance. And essentially, analysts expected PayPal's future guidance to be roughly 18% or really 17.9% for 2022. And what PayPal gave was only 15 to 17%. You know, this stock was a $308 stock, but regardless of that, let's just talk about the day before earnings when this was roughly $200. So this went from $200 to $90 because of, instead of a 17% gain in revenue on the year, we're talking about 15 to 17%. To me, that's a sign of just market fear that this just dropped off so much. And this was during a time that Netflix also dropped, and Facebook as well. And we're going to actually get into Facebook here in a second. To me, PayPal is massively undervalued. We have revenue growth, instead of being roughly 18%, we're talking 15 to 17. And this caused a lot of fear. And this is the same thing with Facebook. They gave not the best guidance, and same with Netflix. Netflix was actually one that I think this kind of started the whole sell-off. Netflix gave not the best earnings. That was a large cap, caused Disney to drop, and we're actually going to get into Disney in a second. Then Facebook's earnings wasn't the best. And to me, it caused a lot of fear in the large caps, specifically the ones that I'm talking about here. But I definitely see PayPal as a great time to get in. And I think at its current price, it is worthy of averaging in, but I really want to get it under 100 personally. I would love to see it retest those lows. Now, as for what the CEO said for reasons why their revenue estimates weren't as high as the analysts, one of the main things was inflation bringing down customer spending, supply chain issues disproportionately impacting cross-border payments. As inflation over a year, 2 years, gets more under control, I think PayPal will definitely recover. And remember, Venmo, which is part of PayPal, actually is partnering with Amazon. And analysts expect that this could be the largest single catalyst for PayPal in 2022, so keep an eye on that. Now, I want to see if we test that $90 level, and I want to see if we come and make some higher lows. Now, if we make lower lows, this would be a bad sign, and this would indicate that PayPal is still a falling knife. But I do really like it under 110. I'm personally waiting to see under 100. But that being said, I still see a lot of growth where it's at currently, and I think it's great to average in through PayPal. And next up on the list of stocks is going to be Disney, or DIS. Now, as for this one, looking at the chart, we have seen lower lows, so I'm waiting to see if we establish a higher support right around this level. I personally want to see Disney start developing a support right around this like 140 level. If Disney does dip down, I'm going to be waiting. I want to see it develop some support around here before turning around, and that will be my buy signal for Disney. I don't have a position in this one yet, so I'm being very patient. As you guys know, I've gotten in and out of this one a few times. I've gotten really lucky with this one actually, and if I was holding the bag, I would be pretty negative on it. So I got really lucky when I got out at a very, very small profit, but I'm not complaining there. I'm just glad that I'm not stuck holding this one. That being said, I think Disney is going to grow massively over the years, and also their streaming service is going to do very well. I actually love Disney Plus. I use it all the time. It's one of my favorite streaming services actually. I know that's anecdotal evidence that has nothing to do with anything, but just thought I'd throw it in there. Now, what happened with this one reason why it dropped so much is when Netflix released their earnings, their growth was a lot less than expected. And this caused Disney to drop kind of as a sympathy play because it's seen as a streaming service as well, although there's also the parks and other services that they provide. But to me, that was a buying opportunity. And I think long-term, Disney is going to be great to buy while it's under 150. I think if you're patient and just slowly average through on Disney, trade it long-term. As we go through the years and become, back to normal, the parks get back to full capacity, everything normalizes, I think Disney is going to be set to explode and work its way eventually towards $200, but it's going to take a while in my opinion for that to happen. Now, one more negative besides that on the technicals it's hitting lower lows. One more negative is going to be that their cash to debt, okay? Their cash is 14 billion and their debt is about 54 billion. So that to me is definitely a red flag. And I want to see how they're going to service this debt. I want to see their next earnings coming through and see that cash increase and that debt decrease. So that is definitely something to be aware of if you're going to invest in Disney, is that their debt to cash is really not that great. Now, moving up and looking at price to sales, it's the lowest it's been, but that makes sense because the stock price has dropped considerably. Forward PE ratio is right around 30. I would like to see this come under 30, but I'm okay with it at that level. And we're sitting at a $250 billion market cap. Now, if I personally had to pick a direction that Disney is going to go, I'd honestly say it's probably going to trade a little bit sideways and then retest these lows here. Maybe not come back towards them, but if we, like I said, if we see it hit like maybe 135 or something and start bouncing, to me that's going to be a sign that these are going to be our lows and we're going to move higher. But I do want to see pull back a little bit before pushing higher. I do think it's going to retest these lower levels personally. And it does seem like we're finding about 142 as a resistance. It was a support back here. We bounced off of it. It became a resistance right around here. And it seems like it's going to be our resistance again. So watch for 142. See that we break that before pushing higher. But that's my thoughts on Disney. I don't currently have this one, but I am closely watching it. And this is one large cap that I absolutely love at its current price. But I would love for it to come down a little bit more. All right, now next up is going to be Facebook, FB, Meta Platforms. Now this one, their earnings came out. It dropped like a damn rock. We hit roughly about 185 before bouncing up. You'll notice that 180 price is actually a pivot point for Facebook a lot of times. You'll see that it hits it, bounces up over it, finds it as a resistance and drops considerably under it, finds it as a support again, bounces over it. And personally, I'm okay with averaging through on Facebook even at its current price. I would love it to come down under 200, but I personally don't think we're going to come under 200. Now, going back about 2 years ago, we were playing with that $200 level. I think we could definitely test 200. I really doubt that we're going to come to 180. But you'll see here when we first tested 200, couldn't break out, tried to break out, had a bit of a false breakout, pulled back, found it as a resistance once, broke out of it, found it as a support, and then of course we had March 2020. I wouldn't really consider this. If it wasn't for this, we would have definitely pushed farther, but we did find it as a support again. But we have used 200 as a support before blasting off, coming up to about 380 and pulling back all the way to 200 again. Looking at it where it is now, I want to see it pull back a little bit and test a $200 area, maybe 210 before bouncing, seeing some higher lows. Okay, right now we are seeing lower lows, but we are up considerably from there, but I do want to see it pull back and find some higher lows personally. But that's all I got for you guys today. Make sure you like and subscribe. I put out daily videos, and until next time, take it easy.